Trade wars disrupt the delicate balance of global commerce, leading to increased prices for consumers and reduced choices in the marketplace. When countries impose tariffs, they not only protect certain industries but also stifle competition, which can hinder innovation. As businesses face rising costs, they may cut jobs or delay investments, ultimately slowing economic growth. Additionally, retaliatory measures can escalate tensions, creating a cycle of conflict that undermines international cooperation and threatens the stability of the global economy. The imposition of tariffs creates a ripple effect that extends far beyond the initial cost increase. When imported goods, like steel, face a 25% tariff, manufacturers are forced to raise their prices to maintain profit margins. This escalation impacts everyday consumers, who find themselves paying more for essential items like cars and appliances. As purchasing power diminishes, families must make tough choices, often sacrificing quality or quantity, ultimately reshaping their lifestyles and the economy at large. The disruption of supply chains poses a significant threat to global industries, as evidenced by the intricate web of sourcing that companies like Apple rely on. With parts coming from various countries, any trade war or increased tariffs on electronic components can lead to skyrocketing costs. This not only affects the price of products like iPhones, but also impacts consumer accessibility and company profits. Ultimately, such disruptions ripple through economies, highlighting the fragility of our interconnected world. Slower global economic growth is a concerning reality, especially when major economies like the USA and China engage in trade wars. These conflicts disrupt trade flows, leading to diminished economic activity and a ripple effect that can stifle GDP growth worldwide. The IMF's warnings about potential reductions of 0.5% to 1% in global GDP highlight the fragility of our interconnected markets. As trade barriers rise, innovation stalls, and consumers face higher prices, the overall economic landscape becomes increasingly precarious. The imposition of tariffs on imported raw materials like aluminum from China creates a ripple effect that devastates local businesses. As costs soar, companies are forced to make tough decisions, often resulting in job cuts and reduced wages. Those once secure positions in manufacturing and construction now hang by a thread, leading to closures and economic instability. The impact is felt not just in boardrooms, but in communities, as families grapple with uncertainty and dwindling opportunities. Tariffs spark a chain reaction that disrupts global trade as countries retaliate with their own taxes. This escalating cycle breeds uncertainty, leaving businesses in a fog of unpredictability, unsure of where to invest or how to expand. With each new tariff, investors grow increasingly anxious, leading to volatile stock markets that reflect their fears. In this environment, growth stalls, innovation suffers, and the economy teeters on the brink, caught in the crossfire of protectionist policies. Developing countries that depend on exports, such as India, Brazil, and Vietnam, are particularly vulnerable to economic fluctuations. When tariffs inflate the prices of their goods on the global stage, demand diminishes, leading to a cascade of negative effects. Unemployment rises as factories cut back, inflation erodes purchasing power, and the overall economy stagnates. This precarious situation highlights the need for diversification and resilience in their economic strategies to safeguard against the volatility of international trade. Currency devaluation can be a double-edged sword. While it may provide a temporary boost to exports by making goods cheaper on the global market, it often ignites competitive devaluations, leading to currency wars. Take China during the US-China trade war. By devaluing the yuan, it aimed to maintain the affordability of its products despite rising US tariffs. This tactic, however, can destabilize economies, provoke retaliatory measures, and ultimately harm international trade relations, creating a precarious economic landscape. The threat of a global recession looms large as trade wars between major economies like China and the US escalate. Such conflicts disrupt the delicate balance of international trade, leading to a cascade of negative effects. Investment dwindles, businesses face production halts, and unemployment rises, creating a ripple effect that touches lives worldwide. The echoes of the 2008 financial crisis remind us of the fragility of our interconnected economy, urging us to seek collaboration over conflict. The US-China trade war, spanning from 2018 to 2020, starkly illustrated the fragility of global trade dynamics. With the US imposing $500 billion in tariffs on Chinese goods, China responded with $185 billion in tariffs on American products. This tit-for-tat escalation led to soaring prices for electronics, cars, and raw materials, straining consumers and businesses alike. As global GDP shrank by 0.6%, millions faced job losses, underscoring how interconnected economies can unravel under political tensions. Trade wars are not just distant political battles. They hit home in tangible ways. When tariffs rise, everyday products become more expensive, squeezing household budgets. Sluggish economies lead to fewer job opportunities, leaving families struggling to make ends meet. The ripple effects of conflict between major economies, like the US and China, could plunge the world into recession, impacting everyone from local businesses to global markets. It's crucial to recognize that our economic fates are interconnected. Trade wars, despite their aggressive posturing, ultimately lead to a lose-lose scenario. Nations may seek to protect their interests, but the fallout manifests as chaos, economic stagnation, and inflated prices that burden consumers everywhere. In stark contrast, peaceful trade agreements foster collaboration, stimulate growth, and enhance global prosperity. By prioritizing dialogue over discord, countries can create a more stable economic landscape, benefiting not just themselves but the entire world. Harmony in trade is the key to shared success.